Hey guys, what's up? Hope you all are having a great week. We're almost halfway through, almost to hump day tomorrow, and almost to the Super Bowl. Hope you guys are all super excited. I know I am. Okay, so to the markets. So if you guys remember, last time we were talking about the TLT versus the S&P 500, right? So we often talk about which way to weight your portfolio. And I'm a big believer in the bonds versus stocks weighting and swing trading from one to the other. So right now, all of my indicators are saying are still long stocks. So they went long stocks last week, and we had this big move, this big run up. Sorry, the bottom right-hand corner of your screen is the S&P 500. So we went long stocks, and we had this bump, and then we came back down. We're still showing long stocks right now. So my indicators include, big money trades, momentum following the futures market. All that still shows stocks, which leads me to believe that this may have been a pullback that will lead to a run up here. But on the other hand, if you look at the TLT, which is in the upper left-hand corner of your screen, so this is the long end, right, of the bond curve. So this is generally 20 years and longer, and we had this big fall right at the end of last year, and since 2017 hit, we had a really nice run. So if you've been following me, I was in bonds during this run because my indicator said to be in bonds. So I was in it, and I came out of bonds right around here. But if you look here, it seems to be making a little basing pattern. So let me remove that. So if you look at the MACD, this is a pretty good setup for a bounce. So in general, if you've heard me before, I was talking about the 125 level and the 130 level as goals for the TLT to trade to. And it looks like we'll probably get that. So it looks like we'll probably get a little move. Rates will come down and at least to 125. At least that's what it looks like right now. If this breaks down and comes back below the previous lows at 116.80, then all bets are off. But right now it looks like a little head and shoulders reversal and a move back up. So if you follow the markets, you know that markets don't always go in one direction. So even if we are entering an inflationary period, which a lot of people believe that we are with the Trumponomics and his goals for growth and the way he's going about it, then we're talking about inflation. So in the long run, TLT should fall, right? We should see a pretty big fall. Bonds have had a huge bull market, some would say a bubble, for the last 30 years even. So we may very well be in a larger downtrend. But that does not mean that we will not get pullbacks. So if this indeed is a nice little head and shoulders, we probably will get a pullback to 125, 130. Rates will drop, at least in the short term, which kind of goes along with a lot of the processes in government. It takes longer to get things done. But the other thing, if you look in the top right-hand corner of your screen, this is DX, this is the dollar index, you see the dollar is falling. So if Trump is talking about devaluing our dollar, like a lot of the other countries are, they're defending their currency, which improves their economy. If he continues to talk in those types of terms, where the dollar starts to fall further, that will further increase inflation. So anyway, another thing to look out for. Now the other thing I wanted to look talk to you about today is, so I talk every month about sector rotation strategies. So you can see in the bottom left-hand corner where I usually have crude oil. Crude oil just hasn't done very much recently. But if you look in the bottom left-hand corner, this is XBI, so this is biotechnology sector. So this is the highest performing sector for the month of January. So if you take your portfolio and you rebalance it based on the top two performing sectors of the S&P 500, you come out ahead. So for this month, starting tomorrow, February 1st, we would go into XBI, which has returned 7.9%, which is pretty huge. So it's been this circuitous route, right? So it's gone like this and like that. So we're up 7.9%, but I don't know. This chart doesn't look great to me. It looks like a triangle. If we break out above that, then yeah, then we may be off to the races. But that's if you're following the guidelines strictly for momentum following and rebalancing on a monthly basis. This would be your first choice. The second choice would be gold, actually. So if we look at gold, this is the GLD. In the last month, so we've done kind of the same thing. So we came like that. And so in the last month, we've done great, right? So this is our return for gold has been 6.1% for the month of January. So that would be your second sector to follow, looking for an increase. But again, this chart doesn't look all that great, really. I mean, we could very easily, in the long run, be in a downtrend for a while, possibly. Because we didn't even get, previous levels of support were around 105 and even 100. So we didn't even get down there. So I would kind of expect a little bit of a turnaround and retesting those lows of 105 or 100 on the GLD. But you never know. There are a lot of people saying that in inflationary markets, again, gold, people like to run to gold. Although if you look at history, gold has not borne out as a great hedge against inflation or even down markets. So it's not the greatest. Although a lot of people do run to it, apparently not enough to reach statistical significance at the very least. So I will show you, let's see, one more thing. So if you go to the third sector, so this is XLB, this is materials sector. So this is really a pretty nice looking chart, right? So we have the 200-day and the 50-day moving upward. We have a little pullback here, so right about to this support level, the previous high, right around 52. So this actually doesn't look bad to me. This looks like a better chart to me if you're going to introduce some subjective, decision making into your monthly strategy. But this returned 3.9% for the month of January. So not too shabby, right? Not too shabby at all. So the top three were XBI, biotech, and then GLD, gold, and then XLB. So if you didn't want to include gold or something like that, if you don't consider it a sector, then that's fine. Then you can do XBI and XLB, but those are going to be your if you're following our strategy of reweighting to the best performers every month, first of the month, then this is what you do. All right, very good. Well, hopefully you guys all have a great rest of your week and enjoy the Super Bowl, whether you're a Patriots fan or a Falcons fan. Either way, they're both pretty unbelievable teams. It'll be a great game, hopefully. All right. Well, have a good one. Okay, bye-bye.